Good morning, everybody. I literally just reset the microphone, so let me know in the chat if we are good to go. This thing's getting quite fussy with me, but let me know. Let me know if we've got our mic robo voice or if we're doing all right. I have a feeling we'll be doing all right for this morning session. Sounds good. Good to go. Audio sounds good. We've got one jokester in the chat. But other than that, everybody else is saying sounds good. Cool. We will continue. We'll keep this show moving right along. Bad audio. Get out of here. I can't tell if you're just trolling at this point. If you keep sending the same spam message about my bad audio, you're gone. I'll boot you. All right? Don't make me do it. Haven't had to do it. I think we've got a very, very impressive chat here, folks. We've got a chat that I don't think we have no moderators, and I don't know how much I should be saying if I'm like inviting the spammers to come in, but no mods. Everybody's very respectful of one another. We haven't had to kick anyone out in quite some time. No bans, none of that. So loud and clear. Everybody's loud and clear. Good. All right. Cool. Let's keep this show rolling. What do we have going on from the economic calendar perspective? Today is Tuesday, March 21st. We've got at 10 a.m. existing home sales. We know that was on the docket from yesterday. Something that's been added was this one in here. Yellen speaking, of course, at 10 a.m. So we'll see what she has to say. But, the market, like I was saying earlier, I think I said this in the comments section somewhere. The market wouldn't care about the Fed announcement here. The market's not going to care about existing home sales. The market's not really going to care about what Yellen has to say unless she hints big time at what's coming down the pipeline tomorrow. Okay, so it's really all about Wednesday at 2 o'clock. We know this, nothing new. Press conference from Jerome Powell is where the market will likely have the most fireworks, right? So we'll see what takes place there. I do imagine that on the rate announcement as well as the new SEP, Statement of Economic Projections from the Fed, that there will be a very big initial move, but I think there's going to be continued volatility based on what Jerome Powell says as the conference is taking place. All right, so that's what I've got there. Mad Eagle, if we don't get a hike tomorrow, then kind of rough in my estimation for the Fed, but we'll see what takes place, right? We'll see what takes place. I think that this is kind of where we land, but who knows? Your guess is as good as mine, and we'll see what happens. All right, so a lot of volatility tomorrow. We know that's the case. Into the end of the week, we'll continue to get some data, but nothing crazy. Unemployment claims, as always, on the Thursday session at 8:30. Friday, we'll be getting at 8:30 core durable goods, regular durable goods, and then in the day's session, after the market's been open for a bit, 15 minutes, services and manufacturing PMI. Okay, so just stuff to be mindful of. All right, so I believe some folks are saying the mic's like in overdrive maybe, so I'm going to tone down the volume just a hair on my end so we're not in the yellow zone. We're going to stick in the high end of the green zone. That should be maybe a little bit better, negative 16 decibels on the mic. So maybe that's a little bit better, a little bit quieter, not so high end on the mic. All right, here we go. Stock-specific headlines now that we know about the economic calendar. It's all about tomorrow and the FOMC. What do we see over here? Yellen says that the government could backstop more deposits if necessary. This is probably what's going to be discussed in her 10 o'clock speech. I don't know if it's a speech or just talk today. So 10 o'clock, more news from Yellen, probably about the banking crisis, right? That's usually what all of these things are going to be about right now. What do we see over here? First Republic jumps 15%, leads comeback rally in regional banks on Tuesday. That's this morning. Everything is up. We are getting quite an aggressive rally in the upward direction here. We'll see if that continues. But the banks, right, the financial sector are certainly leading in the upward direction. UBS Credit Suisse deal put Switzerland's reputation on the line. There's been some pretty funny memes, pretty funny little short video clips out there of the relationship between the two. I will say this is not an endorsement. We have no connection to one another, but Morning Brew, one of the guys over there, does a ton of little funny video skits, and they're quite comical, right? So anyhow, check that out if you haven't. What else do we see here? Harley Davidson focus on bread and butter business can lift the stock by 30%, so an upgrade from Morgan Stanley. Never been on a Harley Davidson, but if I were, I think I like the, maybe it's the Roadster. I believe it's the Roadster. The Roadster is the one that I would go with. What else do we see here? Biggest movers pre-market: Tesla, First Republic, UBS, Foot Locker, and more. Foot Locker seems out of place. I don't think that they're reporting earnings. We'll look at the calendar very briefly in just a moment. $17 billion was wiped out of Credit Suisse from the bondholders side, right? People not happy about that in Europe. What else do we see over here? Looking for stock-specific stuff. Hedge fund manager Nelson Peltz, right, says that the government should insure all bank deposits for a price, right? Pick up some revenue on the back end of that. What else do we see here? Dodge resurrects the controversial Challenger SRT Demon for a final year of V8 muscle cars. Interesting. The Demon. Is the Demon technically faster than the Hellcat? Are those two different? I know they're two different models, but are they in two different classes, so to speak? Interesting stuff. What else is going on here? Electric equipment maker getting an upgrade from Morgan Stanley. We won't know who that is, though. What else is going on here? Amazon cuts jobs, or Amazon job cuts rate. Amazon job cuts. What a confusing headline. Or maybe I'm just not fully awake, need more coffee. But Amazon job cuts raised to 27,000, but it's still not enough to right-size the company. Interesting. More cuts there. Recall also that not all jobs are created equal. The 27,000 are probably more of the higher-paying engineering side jobs, tech side jobs. But recall also that Amazon, last we checked, employs like over 1 million people. I get it. A lot of them are contractors. A lot of them are drivers. Warehouse workers. I totally understand. Not all jobs are created equal, but it's a drop in the bucket compared to the total number of employees at the company, right? What else? Some banking stuff. In San Francisco, some people wonder when AI will kill us all. That's a little bit of a doomsday type headline. Interesting. Wouldn't expect that from CNBC, to be honest with you. But anyways, that's it. That's kind of what we have on the headlines. Nothing crazy here this morning. Nothing overly stock specific other than the upgrade to Harley Davidson, which seems like it's out of left field, to be honest with you. Doesn't really seem pertinent given the current environment, right? So banks kind of bouncing a little bit, financials up a little bit, people not happy about the collapse, and an upgrade to Harley Davidson. So great, fantastic. Let's move along. Earnings calendar here. Tuesday after the close. That's today, of course. Nike, GameStop, if you want to get out your popcorn. Are people still interested in this thing? I think it's fallen off of a cliff, but hopefully not so much. Nike's what you want to watch here. Chewy after the close on Wednesday. And then, if anything, General Mills, maybe Darden on Thursday before the open. All right? That's what you've got on the earnings calendar. Nothing else is really impressive here. Let's move on over to the 4-hour time frame chart of our ES and see what's going on from a price action analysis perspective. Here we go. This is a 4-hour time frame chart, and we'll dive right into the price action analysis once we say good morning to some folks from the chat who was kicking us off strong. Up at the very top, we have Chris. Good morning. We've got Cy C, May, Davey Day Trader, Pete, and Repeat was up. We've got Dwayne, Roger, Tut, Lioness, Jeep for Life, Rolando, Jay Hicks, Mickey, good morning. We've got Jerry, Steve, Lou, Greg, Lioness, Luke B, J. Rolden Tax Services, Ryan Speed, John Cardozo, Ronald, James, Quest of Quests. We've got Urban Cowboy, Victor Y, David Ball, Gregory Rulo, Stevie J. Good morning, guys. We've got Thule, Rebecca F. Nice to see you. Kyle Stearns, Capitalist Dog, David Ball. Who else? Looking for some green names here. Inza, M. Spears, The Sandman. We've got Ty Willowpuff, Starlight's here. Justin Storm, good morning. Maria, good morning. DPJ with Gold Cash Bag, good morning. Big Stick gets an honorable mention, of course. And what else? That's it. Cleo and Izzy, I see you guys sneaking in here towards the end. So thank you guys for supporting the channel. Let's dive into the 4-hour time frame analysis. Good morning to all. Hopefully everybody had a great trading day yesterday. Let's dive into what's on the docket for this morning's session. Of course, the uptrend continues, or the counter trend on the 4-hour, I suppose you could call it, continues. The hourly uptrend that we were discussing in yesterday's session continues. We'll get into that hourly chart in just a second here. But recall that on the 4-hour, nothing really changes until we can take out the last big pivot lower high, which was here, right? So, I mean, steps in the right direction. Please, don't get me wrong. This is a bullish-looking chart, but the 4-hour trend has not definitively reversed, right? We know that on the low side, we've been getting lows, lower lows, lower lows, lower lows, lower lows. This really kind of is just a counter-trend rally in the face of an overall downtrend. So 4-hour chart, it's hard to say that it's bullish here, but it's not as bearish as it could be because we know we're outside of this balance range from down here. It's no longer really threatening bear flag consolidation from this perspective. Obviously, we've made, let's go to the hourly, right? On an hourly isolated chart, you got lows, higher lows, higher lows, higher lows, highs, higher highs, and now higher highs in the pre-market. So let's go to that hourly. Let's describe the levels. So again, in this isolated environment, you've got highs, equal highs. As soon as the equal highs started to form here on the hourly, you start to think, okay, neutral. As soon as we go low, higher, low, definitely neutral. So we're neutral as of the close of this day here. Break, back into balance. Technically, we moved towards the low end on the look above and fail here in the pre-market. Never really materialized, obviously, as we know, for yesterday's session. So that's an interesting nuance to take forward, right? The sellers, in theory, got prices back down into this range. There was no, regular trading interaction with the bottom end of the range here, which strikes me as optimistic from the buyers. We've been talking about optimism in the tech sector specifically. Where is it? Here it is, right? And, it definitely sort of has all come together to show us a clearer picture that, hey, it's not as bearish as it seems, even though the financial sector is like blowing up, right? So, technically pre-market, we made it close to this area, but regular trading hours, there's no move underneath Friday's low. Hopefully, we were kind of clear about that on yesterday's session, that this was kind of like that zone we were watching for if there were going to be a breakdown. So the fact that we are now breaking out of the balance once again, and the fact that this is the kicker, right? This is the kicker. The fact that here's Thursday's high, and we're slated to be opening above Thursday's high, that strikes me as incredibly important. Why? Because anybody who is short probably had to stop somewhere above Thursday's high on the look above and fail, thinking prices are going to go back to the bottom end of the range, which was completely a reasonable idea. That was a very reasonable short setup, right? There's nothing about that was like crazy, out of left field. We know that we're in a 4-hour downtrend. We know that everything is kind of like fear and panic mode right now. Look above and fail. Okay, buyers didn't really do their job here. In theory, yes, very reasonable target down here at the lows. So the fact that we're opening above Thursday's high on today's opening print, at least as of right now, 8:41, it does strike me as a bullish indication here, getting above this pivot high. Obviously, also, just getting out of this range once again in the upward direction is also a bullish indication. So hourly chart is respecting its uptrend with lows, higher lows, and then highs, higher highs, and now higher highs. So it's very difficult to be overly bearish on a smaller time frame chart here like the hourly. Now, what do we know about trends, and what do we know about how we get involved in trends? Probably not the wisest idea to just buy the higher high, right? So gap rules will really light the way here on this morning session, right? We're gapping outside of the prior day's range in a big significant way, and we're opening on a higher high above this prior pivot. We're opening towards this area of congestion from in the past, right? If we recall, this zone from in the past represented a pretty sticky area. Support, rejection underneath, support, chopped through it, rejection for underneath, rejection, support, chop, rejection, right? So we're coming into a very sticky area here on 40.30 on the new contract. In the previous contract, it was 40.20, right? 40.20 is what we were watching back here. With the contract change, it's more close to 40.30, all right? So just be mindful of this area up here around 40.30-ish on your ES. So knowing everything that we know, we have competing time frames with the 4-hour chart in a downtrend still, and we're still thinking of this as a counter trend type rally. On the hourly time frame chart, what's sitting in front of us right here, we know that we're in an uptrend with lows, higher lows, and now highs, and higher highs. We are opening on a gap, so I think it's reasonable that because of the competition here between the two high time frames, because of the gap, we can look for a counter trend rally on the hourly, and it would be a counter trend sell, right? Not rally, but counter trend move here to produce a higher low pullback, which would be in sync with the 4-hour time frame trend. And if we go to a 15-minute chart, should make sense from a fade perspective with our gap rules, right? So let's talk about gap rules here on the 15-minute chart. Let's expand this thing. There we go. Looking good. All right. So let's walk through the 3 questions which inform the gap rules. Number 1, where are we opening in relationship to the prior day's range? Here's the prior day's range. Obviously, we are opening well above at the highs here, 40.1750 in the pre-market. So that gives us a true gap up. Question number 2, no need to ask 1.5 when we're opening out of range, right? This would indicate right off the bat, shock and awe, something to do on the open. It should not be a quiet open. Question number 2, where are we opening in relationship to the overnight range? Here's the overnight low. Here is the overnight high. We're opening right on the overnight high, basically, for all intents and purposes. That is a bullish indication, but More importantly, it sets up decent risk reward for the gap fade on the morning session. So risk reward here is favorable for a downside trade, right? And we'll talk about why in just a second. Question number 3, last but certainly not least, what is the overnight inventory position, net long, net short? To do that, you just extrapolate the settling price from the prior day's session. Same thing as saying the close, how much time was spent above, how much time was spent below. And what we'll notice is that all of the time, basically barring this little bit of time right here, everything was above, right? The more meaningful move is above, the more meaningful volume here is above the prior day's settling price. So I would say we're like 99% net long. 99% on the net long side. We'll put L here for long. And that, of course, informs question number 1 and says, yes, on the knee-jerk reaction, there should be a correction to the overly long inventory, and we do have good risk-reward to trade counter to this move, right? So gap rules are in play, and gap rules are favorable considering the answers to our 3 questions for this morning session. Everything is kind of aligned. The stars are perfectly aligned right now for a fade. So let's talk about how this unfolds, right? If we see a failure of the overnight high, again, I want to be, every single time we talk about fades, every single time we talk about counter trend type moves, I want to be very, very clear that this criteria must be met. Okay, so number 1 is that we need to fail the overnight high, aka buyers cannot keep prices over the overnight high, otherwise there is no fade. So number 1 must fail the ONH, overnight high, and then I'll just put an F down here for failure. We must be underneath the overnight high. From there, we look for a breakdown through the opening print. So number 2 is OPB, right? Opening print break. And this is where we look for our short to start to close the gap. And number 3, the is always your prior YHOD, right? Prior high of day is always the target here. And then we look for a gap fill reversal. Okay, so this is the setup for the morning. These are the gap rules. Gap rules tell us a couple of things here. Once again, the 3 questions that we initially answered, this has nothing to do with the 3 questions, but the 3 questions told us, yes, there should be shock and awe. Yes, we are opening close enough to this area here where the risk reward makes sense for a fade. There's your risk. Here is your reward, targeting the prior high of day. Definitely a 3-to-1 given the current position of the market, subject to change, but as of right now, it makes sense. We place a stop over the high of day on the failure of the overnight high. So you're risking this. Your reward, again, is here. And when we arrive at the prior high of day, we are looking to close a majority of the short position. You do not have to close it all, but a majority of the short position. You're being super mindful of a reversal, gap fill reversal, gap reversal. So this is gap rules. When we get here, you're looking for GFR, gap fill, and then reversal. And the reason being, right? Here's just like I'll give you the inside scoop on why we expect a gap fill reversal, right? This one's easy. We know that we're in an hourly uptrend, right? We know that we're in an hourly uptrend. If we're looking for a counter trend move, aka a move lower in an overall uptrend, would it not make sense that you could find a higher low, hourly higher low, at your prior high of day, where you know longs from the prior day's session will likely try to defend their position. They would be willing to add on a higher low, right? So that's why the prior high of day is the target, and that's why we always look for a reversal off of the prior high of day. So hopefully that insight is useful for our rules on the opening bell here. Once again, the 3 questions, not this right here, but the 3 questions we just asked would tell us, yeah, early morning trade is on the table. There's probably going to be something to do sooner rather than later for this morning's open. All right, so this is what I'm watching for. This is always, if I had to rank order the situations of what we want on the day's session, this is always number 1 whenever we're dealing with the gap. I always want to see gap fill and then a reversal off the prior high of day. Now, let's talk about managing expectations, right? Because this is starting to become a very sizable gap. Now, the volatility in the market right now is through the roof, right? We know this. With the banking crisis, with interest rate volatility, bond volatility, nothing's stable right now. So typically what we say is that a gap in the ES of more than 20 points, a gap of 20 points or more, may be incredibly difficult to trade because you have too much push-pull. You have too many people who want to sell this thing for the fade. You have too many people who want to buy this thing because they think that the market's going to reverse here. So there's too much push-pull. The market does nothing. It goes sideways here, right? Typically that happens on gaps that are greater than 20 points. Now, not to insult anyone's intelligence, but we're opening close to 40.20 from 39.90. That's 30, right? So this is a very sizable gap, but given the amount of volatility that we just pointed out in the market right now, I would not just throw my hands up and surrender and say, hey, the gap's too big. We're not going to trade it this morning. Just don't touch it. Let it be. It's probably going to chop around and go sideways. Because of the relative volatility in this market, I would be willing to say that even though this is a 30-point gap, it's probably worth trading for on this morning's open. It's probably worth trading for, okay? So manage your expectations still. This managing expectations never goes away. Managing expectations never goes away. There are just some days where you have to manage them even more so when the market conditions present themselves as choppy. You're always managing expectations, but today is not one of those days where I would be overly cautious just because it's a 30-point gap up. So hopefully we've been clear about that, okay? That is that. The overnight high as of right now, this is for Cody. The overnight high, the level is 40.1975. 40.1975. I know it says 72 here, but obviously in futures we have quarter point ticks in the ES, so it's going to be 40.1975. 40.1975. It's the high of this red bar right here on a 15-minute chart. Okay, so that's that. That is the sort of gap setup for the morning. All right. Now I'll give you one more sort of walkthrough of this, just in case we have some new folks tuning in, but not the full walkthrough that we just went through. I want to tell you why the gap should fill on this particular instance with these people positioned up here, right? It's all about psychology and it's all about positioning. So why does the gap fade in the first place? Look at how the volume increases the closer we get, obviously, to the opening bell at 9:30, regular trading hours beginning, right? But so increase in volume means that more people are positioned closer to the highs of this overnight range, and they're overnight traders, meaning they're short-term, quote-unquote, I use this term very loosely, it's not an insult, they're short-term, weak-handed traders. These are not folks who are positioning for a 3-month time frame outlook. They're folks who are positioning for a quick scalp. So what does that mean? If they don't get paid instantly on the open, aka we do not spend time above the overnight high, breaking down through that starts to put their positions into question. And where do they close out? Underneath the opening print. Added selling pressure, looking for the gap to close, right? So that's why we look for the gap to fill in the first place, because you have people with terrible trade location here who psychologically probably will fold underneath the opening print if they are not getting paid instantly with price acceptance over the overnight high. All right, so that's why we think of it this way in the first place. All right, what else can we say about this? If we get a partial gap fill, that will tell us something about the market. So, a 50% gap fill, something to write around in here. If the market, gives us something that does this and then starts to reverse, that always tells you something about the market as well, right? What should happen in theory? In theory, the seller should drive this right into the prior high of day because there's thin structure. It's a gap. There's nothing here from the previous trading session that we have to worry about as support. So in theory, sellers should make it all the way, quote unquote, home to the prior high of day. If we get a partial gap fill, something that goes halfway through, usually we look at a half gap, right? That would roughly be around 4,005 in the ES, just eyeballing it here. But 4,005 in a reversal, what does that tell you? Sellers are quite weak, right? If sellers can't move it through the half gap, sellers are weak. If we reverse here, longs are easily back on the table to the opening print and ideally through the opening print with higher lows above the overnight high. Okay? So that's a pretty, today we covered a lot on this morning session in regards to gap rules, in regards to psychology, why this stuff happens, what the targets are, kind of what we're looking for specifically, what needs to happen. We've covered a lot in the past, 5 minutes or so of walking through this, right? So take that home with you, add that to your mental bin of trade setups, trade reasoning, market reasoning, right? And it all let's just clear this overwhelming screen up for just a second. It all came from a very simple analysis of the 4-hour chart being in a downtrend, the hourly chart being in an uptrend, but we know that we're sitting on a brand new higher high, so it's reasonable to look for a counter trend move. Pair that with the 15-minute chart, which is showing us clearly that we have gap rules in place, and the pieces of the puzzle should come together to give us a pretty clear story. So I'll give you my scenarios. I'll give you 3 scenarios that I would be watching for on a morning like today. Arthur, thank you so much for the 22 Canadian. I appreciate that. Hopefully, through walking through this, you've easily received at least, what would it be? 2 ticks of value in 2 ES ticks of value through walking through this scenario. So thank you, Arthur. So the scenarios I would watch for, I will rank order them. Number 1, my preference for this morning session would be a gap fill reversal, something that does this. That's always number 1. G, F, and then R. Gap fill and then reversal. We just walked through why. Number 2 situation that I would love to see. This is also quite high on the tier list of reasonable things to unfold, right? Something that does this, then a reversal off of the half gap. Why? Because you guys know I'm the perma bull. I'm the one who always wants the market to go to new all-time highs. I'm the guy who's always looking for an excuse to be bullish on this market. You know that. I'm the perma bull. You want bearish information? Go listen to somebody else, right? In all seriousness, no. In all seriousness, this would be an implication that sellers are weak, right? We're opening on a gap. We're breaking out of the 4-hour and hourly balance, daily balance. So a partial gap fill and then a reversal, PG, F, and then R is like kind of tier number 2. That would also be a very reasonable and strike me as a decent trade setup in the upward direction. Number 3, bottom of the barrel, I'll even put it down towards the bottom of the screen. What I would not like to see is just something that continues to run in the upward direction. I think chasing that here is an incredibly difficult move to make, especially ahead of FOMC, right? I don't think that too many traders would be willing to chase this in the upward direction ahead of the announcement for tomorrow, right? So I'd prefer to see the structural trades unfold where we respect these levels and our risk reward is well defined. If we do just continue to blast off to the moon here, I mean, maybe we get involved on higher low pullbacks that move into VWAP, right? Something that does this and bounces because we can define our risk right here, stop, entry, and then target high of day and continuation, right? So I would prefer not to see continuation in the upward direction like this. And then, I suppose we're always looking for the gap fill reversal down here, but if we go lower high and poke into the prior day's range, that would also fall pretty low on the tier list here, simply because it undoes the progress on the hourly chart that broke out of the hourly balance, right? So that also falls low on the tier list just because it means that the market remains choppy. Market remains choppy if this happens and we fall back down into, see, I can't speak and I can't speak and write at the same time. Forgot the H in here. Chop. All right. So that's what I would prefer to see on this morning's open. We've walked through things in detail here today. Let's take the poll. Let's see what you guys think is going to unfold on today's session. All right. So we'll clear that up. Now it's your turn. If you are a bull and you think that we go partial gap fill, break, higher low above, and continue to rally, let's see a number 1 in the chat. You are a market bull. If you think that we go partial fill, actually full fill, reversal, but kind of hover down here and go sideways, a number 2 today, even though you're neutral on the day's trend, it probably does find, a number 2 probably finds value above the prior day's session, okay? And then the bears want to see this thing go straight down to close the gap, lower high, and break into the prior day's range for that chop we were just discussing. That would be a number 3. Let us know if you're a bear in the chat with a number 3. And if you've got no darn idea what's going to unfold on today's session, a number 4 is the number for you. If you've got the if you've got the lurker syndrome, that's what I was trying to say, I'm going to type in the official clickable YouTube poll right now. So what do you think? Question marks. Number 1 is bull. Number 2 is newt. Number 3 is bear. And of course, number 4, ostrich. Cool. All right, clickable YouTube poll is out there in the world. You can participate that way if you are a lurker and you do not like to make yourself known in the chat. In the meantime, I'll just briefly scroll up in the chat, see if we've got any questions, comments, concerns here. Yeah, Shaheen, I totally agree. The worst thing for the opening bell right now would just be a nasty red-bodied bar that closes most of the gap right before the open. That definitely complicates things. Obviously, it's we're coming up on 9 o'clock right now, so there's still 30 minutes to go until the bell actually does ring, but that would be less than ideal if the fade starts in the pre-market. So the closer, just again, as we're waiting for some responses to the chat poll, The closer we can open to the overnight high, the better risk reward, the better the chances, the better the odds, the everything, the better everything is for the fade in the downward direction. Now, it doesn't guarantee that it has to happen that way, which is why we use a respectable stop here. The trade doesn't work every time, but the risk reward is like a no-brainer, right? If you can pull this off on the market, especially given the psychological implications of longs trapped at the highs, why would you not take that trade, right? It doesn't have to work out 100% of the time, right? It probably won't work out 100% of the time, but the risk reward makes so much sense that that is a trade I will take every day of the week if it presented itself, okay? All right, what else? Any questions, comments, concerns? Yeah, we can go over internals in just a second, Davey Day Trader, for watching that on the gap fill. Yeah, this is Trading University 201, not 101. We're well past 101 here in the chat. All right, cool. With that, we're into some poll responses. We've got lots of 2s and 1s early on, which makes sense as always. Folks feeling probably a little bit more neutral, it seems, as I get deeper through the list. There's not a clear shift to 3s. I know we've got some people who are just our notorious 3 gang, but as of right now, a lot of people are feeling neutral here, and that makes total sense given the gap. I think it makes sense given the gap and the fact that the market, oftentimes, doesn't happen every time, but oftentimes the market will just hang out in limbo ahead of an FOMC announcement, especially one that has as much severity and impact of the one we're about to get tomorrow. So I wouldn't be surprised if we get sort of a 2 situation. Gap closes, and then on the reversal, we don't make it all the way up here. We don't make it back to the opening print. We'll see. One thing to also just remind you of, folks, one thing that I want to remind you of, I know we've been discussing a lot about what we're expecting on the open. Don't forget, we've got pretty wrapped up in the price action here. Janet Yellen is speaking at 10 a.m. At 10 a.m., we get Yellen, okay? Again, I probably think the market focuses primarily on the FOMC and writes off whatever Yellen has to say here this morning, but all it takes is the right combination of words. All it takes is her to say something about the financial crisis. The market spirals out of control in the upward direction. You don't want to be short. The market spirals out of control in the downward direction. You don't want to be long. I'm not saying don't trade at 10 a.m. I'm just saying at 10 o'clock, you better have a stop loss in place, and hopefully you've trailed it to a position where it's in the money, right? You're locking in profits. So it's not that we don't trade close to 10 o'clock. It's just that we need to be very mindful of an injection of volatility at that point in time, okay? So that is 10 a.m. for anyone who is wondering. Okay, we'll clear that up. I think that, again, the majority of traders in our chat are feeling a number 2 today, which was gap fill reversal, but kind of just chopping in here for value above the prior day's session, but not really continuing in the upward direction from a trend perspective. Okay, 2 with a touch of 3 from John Wilkening. Totally reasonable. I think that's totally reasonable. All right. Yeah, Yellen is going to be yelling, bye, 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 bye. What's that? There's a Jim Cramer like soundboard meme where he's going like, bye, 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 bye. I got to get that hooked up somehow to the stream. But anyways, we want to talk about internals on the open as well for gap filling. It's very likely. So here's, you thought we just went through trading 201, right? And that was cool. You learned something there. That was trading 201. Let's step into trading 301. All right, this is trading 301 now. This is the next level of trading. So on the open, it's very, very likely. Do not be surprised if these breadth indications open up at I would be willing to spitball out there 10 to 1 on the open. This is a 30-point gap. It's significant, right? There's a lot of volume being traded here in the pre-market. I wouldn't be surprised to see the inflows extremely aggressive on the open. Most things will be opening above the prior day's high, above the prior day's close. I would not be surprised at all to see 10 to 1 reads here in the market internals. All right. So if that does happen, then what you want to see, if you're trying to fade this market in the downward direction, you want to see them open at 10 to 1 and then start fading off, obviously working their way closer to parity at 1 to 1, right? So I'm not saying it has to go immediately to 1 to 1. This moves very slow. It's not going to be something that is rapidly, sliding all over the place on the open. It's probably going to go slow. It's going to go 10 to 1, and then it might drop down to like an 8 to 1 after 5 minutes into the day, and then maybe if the gap's going to fade more aggressively, we start going to a 5 to 1, right? And then maybe we hover around a 3 to 1. It probably will not reach, unless there's a big reversal and the market's just falling off of a cliff here, it probably on a day like today will not reach at all parity reads. It'll probably stay around 3-1 or better on the entirety of the day's session, unless there's just clearly, a massive move back down into the prior day's range. The market's falling off of a cliff. I wouldn't expect 1-1 on a day like today. Okay, so what does this mean for our trading on the open? Just be mindful that if it's increasing, right? If we go from 10-1 to being better on the open, 12-1 on the first 5-minute bar, 15-1 after 10 minutes have elapsed, then guess what? You probably don't want to be shorting this market for the gap fill. All right, so if this is improving, it decreases the odds that the gap will actually fade. The advanced decline line is very likely going to be opening somewhere in trend zone, maybe even above positive 2,000. You want to see this start falling, right? It doesn't have to get all the way to the zero line, but it can't be staying sideways up here. That would be telling you that nothing is moving lower in the market. All right, we need some things to be moving lower in the market if the gap is going to fade. So this needs to start falling. It doesn't have to get all the way to zero, but it does want to start falling off of the open, does not want to climb or go sideways above positive 2,000. If for some reason, sometimes weird things happen, and even though this gap looks really significant, you would imagine an open up here. If for some reason the advanced decline line opens, here, that would be a stronger indication of a fade. What does that tell you? Obviously, across the exchange, only a couple of the really heavyweight, companies are doing well. Think of Apple. Think of, anything on our core list of companies basically over here. The heavyweight companies, they're doing really well, but the breadth across the entirety of the exchange, it's okay, but it's not great, right? So if we open here, that would be a decent or a better indication of the fade actually taking place. Okay, that's the advanced decline line. The tick, the most telling of all the indicators on the open. All right, the tick is very likely going to open somewhere up here over positive 1,000. It does need to move to the zero line rather rapidly. You can't really afford for this one to go sideways up here and expect the gap to fade. If it stays sideways, what does it tell you? It's telling you that everything on the exchange at that moment in time, because this moves the fastest out of our four, right? Obviously, price action is number 4. Moves the fastest. If it stays sideways above positive 1,000, nothing on the exchange is moving lower. Nothing. And this doesn't matter if we're above or below the prior day's close. Has no regard to the prior day's close. This is what's happening right now based on the last print and the tick that happened right before, hence the name the tick. So if this just, stays sideways above 1,000, very, very difficult for the ES gap to fade. Very, very difficult. If the tick does come into the zero line, that's where we want to see it go. And ideally, if the gap is going to fade, we start seeing ticks under the zero line. It doesn't mean that everything's crashing out there, but it does mean that things are fading off of the open from an exchange perspective, which would increase your odds of the ES moving in sync, right? This can only do what the 11 sectors are doing. It would increase the odds of the gap to fade to your prior high of day. Okay? So this has been trading 301. This is adding in context to everything we just discussed in trading 201. And if you're still stuck in trading 101, that's cool too, right? Everybody starts somewhere. If this was a little bit too in-depth, a little bit too much, too in the weeds, so to speak, then it comes with time. Stick with it. Get your screen time in. These things will make sense as you start watching them over and over and over and over again, but we'll leave it off at that, okay? We've got 9:07 on the clock. We've been, this has almost been like a... You want to know something funny? I could clip this entire thing off of YouTube and, sell it as a course for $1,000 or something silly like that. That's probably what some fool would do. Or I shouldn't say fool. A smart business person would do that, but I'm not going to do that, okay? I'm not going to do that. I'm just saying, the information that we've just covered, I don't think you're going to get that in many other places here on YouTube for zero. All right, so trading 301 has completed. Let's take a look at the NQ. We're going to move a little bit quicker through the remainder of everything we've got to cover on the stream this morning, obviously for time's sake, but I think, again, the learning lessons that we just walked through are probably far more valuable than covering like the core list of companies or whatever on this morning session. So anyways, NQ, NASDAQ, what do we see on the NQ? Obviously, we've got a big blast off in the upward direction. Price is continuing to move higher. 4-hour trend is not down. The 4-hour trend is absolutely not down here. We've got lows, higher lows, higher lows, right? On a bigger pivot sense, this is a higher low. But most importantly, like the biggest implication on the 4-hour trend that it's neutral or up is the fact that we are well above this prior pivot high, right? This has easily produced a higher high. So the 4-hour is not in a downtrend. It's actually in a new uptrend, or if you're a little bit more pessimistic about markets, you could call this section overall lack of trend and just say, okay, it's neutral in this box. Okay, so personally, I would lean on uptrend. If we go to an hourly time frame chart, I mean, if we isolate this price action, very difficult to say anything other than bullish things. Uptrend here, lows, higher lows, higher lows, higher lows, higher lows. Along the way, right, same thing. On the up move, we're sitting on equal highs. Recall that we can get involved on equal high breakouts. We did see a counter trend pullback that did establish a higher low. We also, it's noteworthy that this higher low is in a couple of places, right? Number one, it's well above the top of this balance here. But number two, if you think about this, we just saw it more clearly on the 4-hour as a double bottom. This higher low pullback perfectly respected 12.6. That was our number, which is the neckline of the double bottom. So from a pattern perspective, from a structural perspective, this does strike me as a very significant higher low that has been produced. And that, of course, is bullish on the equal high breakout here. Okay? Think of this as an inverted H pattern, call it a bull flag, call it whatever you want to call it. It obviously has bullish implications. Now, let's go to a 15-minute chart, because although we do have bullish implications here, let's quickly just think, right? Are we longing this on the open? Are we being patient? What's the deal? Well, number one, because we just described on the 4-hour and hourly charts the equal high break of this area up here, I would say it wouldn't be unreasonable for a gap and go in the NQ, in the NASDAQ 100. It wouldn't be unreasonable. However, noting that we are gapping out of the prior day's range, I would still say things equivalent to what we described in the ES, right? If you look at the volume, obviously more people are getting net long towards the top of the move. Psychologically, if they're not paid on the open, they should start to panic under the opening print. We look for the gap to fade. Now here, gap fill reversal, absolutely. 4-hour uptrend, hourly uptrend, reasonable consolidation up here, builds the concept of the hourly bull flag, 4-hour bull flag, break the top of the range, and we're off to the races. All right, so NQ, even stronger on a gap fill reversal. If we do get continuation, once again, I think that it's a little difficult to chase the gap and go, but it's more reasonable to do so in the NQ because of the structure as opposed to the ES. All right, more reasonable to do so here than the ES. Do we have an upper target? I can't remember if we had something picked off here. No, we don't. Let's go hourly and make sure we're not missing something. So recall also, if I zoom in on this segment of the chart, this is pre-market activity, but regular trading hours, right? Regular trading hours, regular trading hours, regular trading hours. This higher level up here, it only has, I suppose from back here, it's slightly more important, but this is an after hours high. All right, so just be mindful that it's got some significance because of these two interactions back here, but the zone really is still this 12.8 that's going to act as a gatekeeper, right? Breakdown, breakdown, resistance, resistance, strong breakdown. All right, we know that. So the next zone overhead, what I would do is I would draw this in as a light zone, right? I would just be mindful of 12.9, about 100 points higher. We'll bump this out to what? Let's go April 1. And we'll make it a light zone. So instead of 80%, we'll go 90% on the opacity there. Very, very light, probably difficult to see on your screen, but hey, deal with it. And then the high here is the next big one, right? That's the next big one. This will not get changed from a color perspective, and we'll go out to April 1, just like we do with everything else. Good. Okay, so going back over to the recent price action, you can see the structure. Let's do something like this. This is if we get a gap and go. You want to be mindful of 12.9, and then that's the high there, closer to 13. What's that? 13.05. 13,050. Interesting, right? Right around in this zone. So that's quite a ways to go, but again, the NASDAQ is the place to look for the equal high break instead of the ES, instead of the S&P 500, right? The structure here is better. We're not just jumping in long. Again, let's be very clear. 15-minute chart tells us to be at least patient on the open for the opportunity for a higher low pullback, right? I would still think that this is still a primary scenario for the NQ, but stronger here on the bull side in the NASDAQ markets, which should make sense. We know that tech has been the relative strength monster. All right, that's NQ. Let's take a look at the RTY, Russell 2000. What's going on? 4-hour time frame chart. I told you I would speed it up, and I am not doing so. So let's actually do that. with the remainder of the program here. So there's a downtrend, there's a downtrend, there is still a bear flag. We're at the top of the range, right? So Russell's going to tell us something on today's session. There is a balance range. Recall in yesterday's pre-market stream, we talked about the undercut, look below and fail. We're coming into the top of the range. That completes that pattern, and it wouldn't be unreasonable for the Russell to see a little bit of a pullback off the top of the range. Now, what does that mean for us? Okay, let's go hourly time frame chart. Let's focus on the nuance here. So there's the balance, there's the look below and fail. We're at the target. Nothing really new to learn here. If we do break in the upward direction, there is some room to run closer to 1900, but let's keep going down. 15-minute time frame chart. Zooming in here, oh, would you look at that? We are opening on a gap up. What does that tell us? It tells us that a fade is probably more likely on the open. So if we're expecting a fade, oh, how convenient. We're at the top of the daily balance range, the 4-hour balance range. Even if we push into this area, it would still be reasonable to look for rejections that come back down and close the gap to the prior high of day. All right, so Russell, gap fill is still on the table. Ron K, thank you so much for the 10. Same thing for Shaheen here. Appreciate both of you guys. I get fired up sort of giving, I don't want to call them lessons, but explaining my thought process on how to properly think about the market. I think that's a better way of putting it. They're not so much lessons. I'm just describing to you the way I think it's correct to think about the market from a psychological perspective and also an indications perspective. So I love doing this. Russell, right? Something that does this, reasonable. Gap fade on the table, prior high of day target. From there, gap fill reversal, upswing, keeps us on a reattempt off of a higher low, top of the range, 1800 breaks we just saw. Quite a ways to run. Like obviously on the thin breakdown structure from the panic last week, 1900's on the table on the upside. Okay, so that's that. Russell, we'll leave it off at that. I know we don't have too many Russell traders in here. I would say that if you're going to keep this on your screen as just a bellwether for the market, absolutely you should. Just be mindful of our range on today's session. If we're breaking the top, I would be more optimistic and bullish in the markets. If we get a rejection here, you know the deal. We're looking for a gap fill across the markets. Okay. Let's move into our core list here, the cash ETF equivalents. Obviously, the numbers are quite well respected on the spiders here on the daily chart, right? We're above the top of the balance here, which was 393.50. That does strike me as a bullish indication. We're getting tangled up around this resistance, the midpoint of this prior range in here. Makes sense, again, that with this overnight inventory imbalance, we can watch for a fade. And then, obviously, gap fill reversal here. So we've given you the criteria to watch for. The numbers are fairly similar in the SPY. They're the same numbers we've been watching for quite some time. The most important level is if we do fade here, a higher low. So let me also, now that we've got kind of like peak viewership, 1,000 plus people-ish in here, I want to be very clear. We've been talking very aggressively about the gap fade, but I don't know that everybody was here for the initial criteria that must be met before we go short this market and try to fade it to the prior high of day, right? So I don't want anybody to be confused here this morning. We're going to say it one more time. This is the last time I'm going to say it for the gap rules, right? We need to fail the overnight high and trade lower under the opening print if a short setup is going to unfold. We are not blindly shorting this on the open. I don't want anybody who's in the stream here this morning to, as soon as 9:30 bell rings, hit the short button and short 10 contracts of ES expecting a massive payday because Matt said so, and we're going to 393.50 or in the ES prior high of day. It's not how it works. You've got to make sure you've got to get that confirmation indication that we have failed the overnight high and we have broken down through the opening print. All right. So now that we have more viewers in here, I feel it's my moral, responsible duty to tell you one last time that the rules must unfold that way. Otherwise, there's no short. There's no short, okay? If it continues to float away like a balloon, so be it. We know that it's very difficult to chase on the long side. We need a higher low pullback above VWAP, and we'll go from there, okay? So gap rules one last time. That's the kicker. That's the last time I'm going to mention it. I'm going to assume from this point going forward, now that viewership is decreasing, that everybody has heard the criteria, okay? Everybody has heard the criteria. Karen, thank you so much for the 10. Appreciate you. Same. Oh, 12. Thanks for the 12 from Karen. Came in 2 little separate bubbles there. Thanks for tuning into the stream. Much appreciated. Appreciate you being here. All right. QQQ. Same ideas as what we just described in the NQ, right? Obviously, you're looking for your prior high of day. That's at 306. 306 is the level here on the downside for the gap fill reversal. That also produces a higher low. It keeps us, easily in the prior upper range from here, which is bullish, keeps us well above the neckline of the double bottom pattern here. Everything about this is on the bull's side right now. Again, intraday, a little fade here. You could try to scalp it short, and that's a reasonable thing to be watching for based on the rules we've just outlined. That's the downside, right? But overall, 306 gap fill. If it does go further, still any higher lows above 302 just builds out daily bull flag here, and then we go from there. We take it one step at a time, crack the top of the range, and we're off to the races, all right? IWM Russell 2000 small caps, what's going on over here? We just talked about the RTY futures being in a range and talking about them at the top of the range. That's the exact same thing here with the IWM. Obviously, we're expecting a little bit of a fade to close the gap to the prior high of day, but if we're above the range, right, think of this as a quote-unquote indicator for your market. It's not a market to so much trade. I suppose you could do it if you're interested in that. But for me, it's more of an indication for our markets. Bullish risk on. If we're above, the number is 176.75. If we stay underneath, if we do not get a gap fill reversal, we poke into the Monday range here. It's much more neutral for our markets staying in this balance area. In the grand scheme of things, don't get me wrong, bear flag consolidation. But on the day-to-day, intraday activity, staying in this balance zone is neutral. Right? It's not really telling us anything about the edge for the bulls or bears. Let's move along and take a look at Apple. What's going on with AAPL? Here is a balance range. You could draw it in a number of ways, right? You could do this, you could do this, you could say it includes this down here. However you want to do it, doesn't really matter. Bull flag is the context, breaking the top of the flag range on yesterday's session, getting price acceptance above the top of the flag range on yesterday's session. We talked about the hold of 154 being bullish. We got that on the open. Hopefully you could capitalize on Apple yesterday. Going forward, right, looking for continuation here as long as we hold up above the top of the flag range at 156.50. That's a fairly straightforward trade. So either just continuation off of bullish setups or pullbacks want to hold the top of the range, 156.50. 156.50. You could be a little bit more nuanced and say it's something like 156.80, 156.90, prior pivot high from intraday here, but the top of the flag range is so pivotal on the daily time frame that I would just go based on that. Starlight, thanks for the 5. Same thing for Jerry H. Thanks for the 5. Appreciate you guys being here. Appreciate the contributions to the stream. So Apple, we know 156.50. Continuing along, Netflix. A little bit surprising yesterday. I was trading the short side in Netflix in the downward direction here. Ended up getting stopped out on this particular trade on a rip back in the upward direction. But I think the thinking was still correct, right? Bear flag, break down the prior day's low, failed, rejection here, right? So whatever, that's besides the point. Going forward for today's session, I think it's kind of a wait and see in this zone. I don't think that, Netflix isn't so clear to me. Maybe you've still got some trapped shorts from this flush of the low, and if we take out the high more meaningfully over 307, we get 312 again, top of the range. But on the daily chart, right, you probably just want to wait for better structure. If this turns into a higher low double bottom, the better break on the long side is just over this area in here. So I think Netflix is a patience play. Didn't really work out on the short side here, so wait for the next setup, maybe over 312. Next up, we've got Tesla. Jason Smith with the 5 as well. Wow. You guys are feeling generous this morning. Appreciate that. Tesla on the gap up this morning over 185, but still underneath. Oops, let's do this. Still underneath 188.50, right? That's the bottom of the balance range from in here. I would be cautious on Tesla, right? I think that there's an opportunity for maybe something that does this and then a re-break through the range. If we get a gap and go here, I think it's tricky just because you're trading into this overhead supply. I don't know that this is the cleanest long setup, although the gap does look, it looks interesting. It looks exciting and all that good stuff. I'm just skeptical of this overhead range through here, right? I think that easily if the market starts to see a gap fill, I think Tesla could obviously see a gap fill as well, but more importantly on the daily chart, that starts to look something like this. That is not what you want to see if you're a Tesla long. It's really just a break and retest of the balance area, right? So if the market gives us a gap fill, Tesla starts moving in sync with the market in the downward direction, it's really not a clean long here in Tesla. Right? Again, I know the gap up looks enticing, it looks exciting, all that good stuff, but I don't think it's a long based on the structure overhead. All right, Google, what's going on here? Google, 2-day balance range above the this level, obviously from in the past, considering that we're opening inside. I think it's just a patience play, right? Google's a patience play here, caught between a rock and a hard place. Either flush the lows to retrace the thin structure. We talked about this yesterday, and we'll leave it off at that. Let's go 4 days here so we can see. So there's the thin structure, a breakdown of the 2-day lows. Door is open for the short, breakout over the 2-day highs. maybe scalps in the upward direction. I wouldn't overstay my welcome noting the overextension here in the upward direction. All right, and I certainly, this goes without saying, nobody should be holding anything through, maybe, I should say this carefully. You should not be betting on FOMC tomorrow to make or break your position. If you're preying on FOMC to crash the market and you're just holding shorts because of that, probably not wise. Unless you have a longer time frame, you have a looser stop, so be it. But don't be, all of these setups are subject to change for tomorrow's FOMC. All right, Meta. Gap up big time over a red bar. Anyone who was positioned short yesterday squeezed on the open. This does strike me as significant. Gap in green over red is always a good look for the bulls. Reasonable pullback here. Hammer candle opening over the high. Be mindful of the gap fade, but looking for any excuse to get on board the long side after a higher low pullback in Meta. Could be the full gap close, could be a partial gap close, could be respecting 201.25. Any high or low kind of excuse here in Meta seems tradable on the bull side, right? So I would be watching bulls in Facebook, Zuckerberg's Fantasyland, NVIDIA. A little tricky to trade up here at the highs, considering the inverted hammer that we're trading into, considering the upper wick from here. We're opening in that structure. Obviously, it's a gap up, so gap rules are in play. But a new money long in NVIDIA right now, I think it's tough. This was the move, right? We sort of caught some of this. Or at least hopefully you weren't short in the box, right? We talked about this box, and now it's waiting for the next setup. Ideally, right, this does materialize in the upward direction, but it's a better intraday setup. The gap up here, a little concerning. I suppose, gap fill reversal, very much so on the table. That would tell you something, right? That tells you that anyone who's trying to short here and short here for the pullback through the thin structure is not getting paid. If those folks need to close out, it's obviously off to the races. So watch 260. 260 NVIDIA is the level to watch. 260, 260, 260. All right, Microsoft. Sammy Sams with the 999 and Mr. Jang with the 499. You guys are, I don't know what it is about this morning's stream. Maybe it was the in-depth walk through the gap rules or what, but very, very generous of you folks. Truly appreciate it. Hopefully you've gotten at least that much value out of the stream, right? Microsoft pulling back, getting through some of the thin structure, obviously moving back higher on the opening print here in the thin structure from the breakdown of yesterday's session. So this is kind of a choppy zone. I would say that there's a better, there's a higher probability of going here, right, to retest the low of the inverted hammer and the breakdown point from yesterday. So I would be mindful of 276.50. 276.5 in Microsoft is the number to beat. Lower highs underneath keep it bearish for the breakdown and pullback. You've got a poor low here at 270, flushes to close the thin structure all the way down to 266. So probably choppy through here, favoring longs on higher low pullbacks that remain above 270, 375 to retest the breakdown low here, 276.50. And then if for some reason markets go to hell in a handbasket, it's trading here. This is a flush point. 270, breakdown, boom. 4 points of range on the downside in Microsoft. Okay, so situational awareness there. Next up, last but not least, the mini beast Amazon. Then we're out of here. What's going on with this one? Gapping? Nope. Inside the prior day's range. Some news headlines about the job cuts is still not enough to push this higher. I suppose that's kind of what was happening here. But regardless, right, if you think about the structure, here's a pseudo double bottom. It's a lower low double bottom, so not as meaningful, but we're getting continued buyers stepping up at the retest of the neckline, at the daily 50 SMA, inside the prior day's range. This is a simple setup, right? Break, retest. We're looking for continuation, aka a break over the hammer high 98.50. Watch 98.50. If we break that, you could start to look for rotations into the 101.50 area again. That would be your upside target, right? The hammer off of this structural area of support, daily 50 SMA, does strike me as more bullish than bearish, okay? Falling back down into the prior day's range or just chopping around through here, this would fall very low on the list of things to actually want to trade on the open. Let's quickly check in on the ES, make sure we don't have to adjust any of our levels. I would feel remiss not giving you the latest and greatest considering what we did prior. It is opening close to the overnight high. We're not too far removed from it. Gap rules are still very much so in place. Once again, folks, for all of you, 863 of you still remaining, it's got to fail. It's got to fail before we aggressively look for the fade. If we get a partial fade and then it stops you out, it's just part of the game. It's part of the game. We got fired up about this setup. I think there's some big learning moments in here on why these things happen. What I don't want anyone to have is just a God complex that this is going to work out now 100% of the time. This is still trading. This is still a probabilities game. I think it's favorable if we get this scenario to look for the fade to unfold. Does it guarantee it? Absolutely not. Absolutely not. So stay disciplined, stick to your stop. Do not oversize the position just because we've walked through this setup in this morning session. Do not oversize the position. Do not get overly confident in the setup now. Again, watch this for a year and then you can start to become confident. And then you can start to size up when you say, all the ingredients are there this morning. I'm going to go, maybe add an extra contract to the position. Okay. So that's it. Got to go. We've got a minute to go until the opening bell because we've got pre-market, trade happening here. I'm out of here. All right. So join the Discord if you're not in there already. I'll send an update in just a moment on opening internals. But with that said, adios. Wish you good luck on the setup. Hopefully you learned something this morning, and I will